Morning, my dear students. Today we are going to take one more sum on the financial statement of sole proprietorship without adjustment. Okay, we have been doing the last few classes on the financial statement, or you can say final accounts of sole proprietorship without adjustment. In the next class, we will be starting with the adjustment. So let's complete this sum. With this sum, we'll end up this chapter. So what is given here from the following balances: prepare trading and profit and loss account and balance sheet for the year ended 31st of March 2007. Okay, the informations are given. The trading and profit and loss account you have to prepare. Okay, and the balance sheet with the information given below. So the informations are like this. One by one, we'll mark it where the items will go, as we have seen in the previous classes. Okay, so first is opening stock. Now, as we talk about opening stock, we know it will go in the trading account debit side, right? T debit side, right? Then coming to the next one, purchases. Purchases also, as we know, it will go in the trading account debit side, isn't it? Purchases comes in the trading account debit side. Then coming to the next one, sales. Sales also we know it will come in a trading account, but it will come in the trading account credit side, isn't it? Trading account credit side. Then coming to the next one, return. Return, if it is in debit, that means it is sales return. Okay, if you can recall that the entry that we used to give in this case of sales return, the entry used to be like the sales return account debit to the customer, right? That is why sales return is debit. It shows debit balance. So that is why it will be having the debit balance of return shows sales return. So what will happen with this? This will be simply deducted from sales, minus from sales. Okay, in the trading account, isn't it? It will be minus from sales in the trading account. So I'll mentioning it like this. Okay, minus sales trading account. Then return credit. Now what will it? Now what is this return credit? It is nothing but return of purchase. So it will also be minus from purchases. Okay, minus from purchases, basically in the trading account. Okay, this will also be in the trading account. Now moving to the next one, factory rent. Factory rent also, as we know, it will come in the trading account debit side. Okay, coming to the next one, custom duty. Custom duty also trading account debit side, because generally it is paid for import of goods, isn't it? Coal, gas, and power. This is also a part of trading account debit side item because it is directly related to production. Now, wages and salaries. In the previous videos, I have also told you. Again, I'm repeating. Remember that it is like a trade. Okay, if the salary is in front, then it will take in the house where salary goes, that is profit and loss. And if the wages in the front, then it will go in the place where wages goes, that is the trading account. So it will go in the trading account debit side. Now discount debit. So discount debit, obviously it will come in the profit and loss, and where since it is in the debit, so it will go in the profit and loss debit side. Okay, had it been in the credit, then it would have been in the credit side. Okay, then commission credit. Commission credit means it will go in the profit and loss account. Which side? Credit side. अगर डेबिट होता तो डेबिट साइड में जाता. Fine. Then bad debt. Bad debt, it will go, it is a loss, so it will go in the profit and loss debit side. It is indirectly related to the business activities. Then bad debt recovered. There was certain amount of money which we thought that the customer is not going to pay at all, but now the customer is paying it. Okay, so that is why this particular amount of money that the customer is going to pay back to us. Earlier we have written it off. Okay, we thought he will not pay, so we wrote it as bad debt. Now he is paying it, so it is why it is bad debt recovered. So it is a profit for us. It will go in the profit and loss account credit side. Okay, it will go in the profit and loss account credit side. Then coming to the next one, apprenticeship premium. Now remember, apprenticeship premium is one such particular thing item which is very important to understand with regard to whether it will be shown in the trading account or it will be shown in the profit and loss account. Apprenticeship premium, if it is in the debit, that means we are paying. Okay, just a minute. Yeah. Okay, ignore this concept. This particular apprenticeship premium, we can directly treat it. So this apprenticeship premium means what? The amount of money that you are generating by providing training to some of your employer, one of or one of the employees who have come to your business to learn the activities. Okay, तुम सीखने के लिए गए. For example, if you want to learn tailoring, you can go and work with a tailor, and that you can pay him a nominal amount of fees. Generally, they used to pay. Okay, it may be like this that you are paying and you are learning. Okay, it's a training program. Generally, what happens if you want to learn if you want to get some training, you have to pay some amount of money, right? So if you get that particular training from any well authorized organizations, then you have to pay certain amount of fees for that. Okay, that amount of money which they are paying you for giving you on the job training, they will take it as apprenticeship premium. Okay, they're providing you the knowledge of that, so it will be a profit for you. It will come in the profit and loss credit side. Okay, it will come in the profit and loss credit side. Then coming to the next one, production expenses, obviously it is a trading item, so it will go in the trading account debit side. Then coming to the next one, just a minute. Yes, coming to the next one, administrative expenses. It is a profit and loss item. It will be going in the profit and loss debit side. Then carriage. Carriage is a profit and loss. Plain carriage refers to trading account items. So it will go in a trading account debit side. Okay. Now coming to the other side, what is there? Let's see. Capital. Capital is an item of balance sheet, isn't it? So it will go in the balance sheet. Which side? Obviously in the liability side, it will be having its own heading. Okay. It will be having its own heading. Balance sheet liability side. Coming to the next one, drawings. Drawings will be also shown as a balance sheet item, but it will where it will be shown, it will be deducted from the capital. Okay, drawings is deducted from the capital, right? Then coming to the next one, sundry debtors. So sundry debtor is also a part of balance sheet. It will go in the balance sheet asset side as current asset. Remember that. Okay, it will go in the balance sheet as current assets. Here, just highlight it. Yeah. Then coming to the next one. So next coming the sundry creditor. So sundry creditor is also a part of the balance sheet. So it will come in the balance sheet, right? It will also come in the balance sheet. Where it will come? It will come in the balance sheet as current liabilities. Okay, in the liability side as balance sheet liability side as current liabilities. Okay. Then coming to the next one, that is depreciation. Depreciation will go in the profit and loss account debit side. Okay, profit and loss account debit side. Now coming to the next one, charities. Charities also same. It will also go in the profit and loss debit side. Okay, it will also go in the profit and loss debit side. Then coming to the next one, cash balance. Now cash balance, where it will go in the balance sheet as current assets. Cash balance and bank balance both are balance sheet. Cash balance and bank balance both are in the both will go in the balance sheet as current assets, the asset side, right? Then the bank charges. Bank charges will go in the profit and loss account as debit side. In the debit side of the profit and loss account, this is the indirect expenses. Okay. Establishment expenses also will go in the profit and loss account, debit side. Okay, in the profit and loss account, debit side. Now coming to the next one, pant. Pant will go in the balance sheet asset side. Which asset? Will be non-current asset. Okay, balance sheet non-current asset. That is, it will come in the asset side. Okay, leasehold building. Leasehold building will also go in the balance sheet. Which side? As the balance sheet non-current asset. Okay, balance sheet non-current asset. Then coming to the next one, sales tax collected. Sales tax collected means we are liable to pay it. Okay, to the government. The tax that we collect, we have to pay it to the government. So This amount of sales tax collected, actually the sales tax has now been all has been replaced with GST. So better we write GST collected. So GST we have to give it, so it will be remaining as our current liabilities. Okay, we have to pay it. Okay, GST we have to pay it, or you can better write on GST payable. That will be better. It will be balance sheet current liability. Then goodwill, it will be again a balance sheet item, that also balance sheet non-current asset. Remember, goodwill will be placed in the top of all the assets if you are following permanency method, and if you are following liquidity method, it will be placed at the bottom of all the items. Okay, then coming to the next one, again it is a patent. Patent is also patent. What is patent? Patent means the formula or the technique that you have purchased from some scientist or any engineer and all who are well known to those. Okay, once they have developed those formulas and all, you can buy their formula and know how, and you can use in your business. Okay, so for that, whatever investment you make in that, that will be a that will be called as patent formula that you have purchased from them. Okay, patent, right? Like suppose I have developed a model of a car which is very unique. Okay, now I can make a patent of that and I can sell to those who are willing to make that model, and other than that no one can do or copy that. Okay, yeah, so that is called patent, right? That is also a balance sheet non-current asset. Then again, trademark, it is also a balance sheet non-current item. Then coming to the loan, it is also a balance sheet item, but it will come in the balance sheet current liabilities. Okay, it will come in the balance sheet current liabilities. Then coming to the next one, interest on loan, it will come in the profit and loss debit side item. Okay, it is a profit and loss debit side item. Clear? At last, we have got the last item, it is the value of closing stock. Now, see, this is just an example of adjustment. Since this is outside the box, so we call it as adjustment item. Why do we call it adjustment item? The concept of adjustment item I'll explain to you in a detailed way in the next chapter, but I'm just going to give you a glimpse. These are those entries which have not been adjusted during the year. Why, how, all the things I'll be explaining you in the next class. Okay, so since it has not passed through all the process of double entry system, that is why we put the this transaction outside the box, okay, or outside the trial balance, and here we do it in the process of double entry system. That is, we have a two aspect of this transaction. In simple, anything which is in the adjustment will be having at least two or more than two adjustments, two or more than two entries will be there. Okay, so here one example is there, value of the closing stock, which is 25,400. So it will what will happen with this? Once it will come in the trading account credit side, and again it will come in the balance sheet. Okay, it will again come in the balance sheet current assets. Okay, current assets. There are two aspects of this. Once it will come in the trading account debit side, and again it will come in the balance sheet current assets. Okay, so this is how it will be placed. Now we'll go for the solution. Okay, so now coming to the solution, what we can see here is that the trading account, right? So we have to prepare the trading account, profit and loss account, and along with that will be the balance sheet. Okay, so we'll start with that. Let's start. Now coming to the solution, we'll start like this with the trading account. So first of all, it is opening stock, right? So what is the opening stock value? 15,310. So it will come in the trading account debit side. This is the first item, right? So it will be two opening stock trading account debit side. Okay, you can even mention it like expenses and losses, or better you can mention here as particulars. Okay, this all things depend. You can do it. So particulars. Okay, so two opening stock is done. Then coming to the next item, purchases. What is there? Purchases 82,400, and there is the purchase return. See, 2,400. So it will be what? Two purchases less return, right? Two purchases 82,400 less returns 2,400, outer column 80,000. Clear? Now let's go to the next one. Sales. What is the sales amount? 2,56,000. So it will come in a credit side. Along with that, there is a return, sales return of how much? 4,000. So it will come as like by sales 2,56,000 less return of 4,000. Outer column it is 2,52,000. Clear? Now let's see what is the trading rest of the items left. So trading after that, factory rent is there. Factory rent of 18,000 and custom duty of 11,500. So both we can take together. Two factory rent 18,000, two custom duty 11,500. Then let's see what is after that. Coal, gas, and power 6,000. Wages and salary 36,600. To coal, gas, and power 6,000, and two wages and salary 36,600. One by one, we'll just saying. Then after that, what is there? Trading account debit side. Anything else left? Yes, it is production expenses of 2,600. So it will come here to production expenses 2,600. Clear? Let's see what else is there. Trading account debit side. We can see it is only carriage that is left this side, that is 8,700. So it will come in the trading account debit side as to carriage 8,700. Clear? Then coming to next one, that is in the other side, what is there? First of all, we can see that there is capital, so that will not come here. Then drawings will not come here. Sundry debtors will not come here. Sundry creditors, no sundry creditors. Let's see what is the next item. Trading account debit side. No, there's no more item. Now let's see what is in the adjustment. In the outside the box, that is in the adjustment, we can see there is a closing stock. How much? 25,400. So it will come in the trading account credit side. So it will be placed like this: by closing stock 25,400. Clear? Now once it is done, all the items done, then we can go for the balancing. And after balancing, you can see that the debit side total is less than the credit side. That means this is a gross profit. So we'll take the total of credit side on both the sides, and after deducting, you can see it is 98,690 rupees. That is a gross profit credit down. Okay, you can even write down transfer to trading account. That is also correct. Okay, so it will also come here in the profit and loss account by gross profit brought down as 98,690 rupees. Clear? Now let's start with the profit and loss items. Let's start from the beginning. What is there? Where is the profit and loss account? Profit and loss account, it is here. Discount debit. How much? 7,500. Generally, we put the salary at the top, but since salary, wages and salary is together, so we are not going to touch that. We are going to start with discount. So discount is 7,500. It will come in the debit side. So to discount, it is 7,500. Clear? Let's see what is after that. The discount is followed with commission in the credit side of 1,200. It will come in the profit and loss credit side. So it will go in the profit and loss credit side as by commission 1,200 credit side. Clear? Now let's see what is the next item. After commission, we have got bad debt debit side 5,850. So it will also come in the trading account debit side. Sorry, profit and loss account debit side as to bad debt 5,850. Okay. Then coming to the next one. What it is? Bad debt recovered. How much? 2,000. Bad debt recovered 2,000. So it is a loss or profit. Yes, it is a profit. Okay, don't get this concept with the bad debt. It's a profit. So before that, bad debt we have already put in the debit side, isn't it? So bad debt recovered is a profit. So it will come in the profit and loss credit side like this. By bad debt recovered 2,000. Clear? Then let's see what is the next item. We have got administrative expenses of 5,000 rupees. It will go in the trading account, sorry, profit and loss account debit side. So it will also appear here as two administrative expenses, 5,000 rupees. Let's see what else is there. Now nothing here in this side. The other side, we can see that there are plenty of items starting with depreciation. Depreciation of how much? 4,200 will come in the profit and loss debit side. So profit and loss debit side, we will put depreciation. To depreciation 4,200. Then what is the next one? It is charity of 500. It will also come in the profit and loss debit side. So go in the profit and loss debit side and write down two charities 500 rupees. Thereafter, what is there? Cash balance. It will not come here. Bank. Then we have got bank charges of 180 rupees. It will come in the profit and loss debit side. So two bank charges. How much? 180 rupees. Okay. Then what is there after that? After profit and after that bank charges, we have got establishment expenses of 3,600. That also will come here. Two establishment expenses, 3,600. What else is there after this 3,600? Let's see where is the profit and loss account. At last, we have got interest on loan of 3,000. So this is there. This will also come into profit and loss debit side as two interest on loan 3,000 rupees. Clear? Now we can see all the items are over. So we will go for balancing the profit and loss account. We can go for direct balancing, and we can see that the credit side is more. So it is 1,06,690. Right. So after balancing, we can see that the net profit is 76,860 rupees. Okay, this is the net profit which will be transferred to the capital account. Okay. So this is the net profit which will be added with the capital. Okay, this is nothing but the credit side excess amount. Okay, which is resulting into profit. In simple words, you can say this is nothing but the total of indirect income, direct income plus indirect income minus direct expenses minus indirect expenses, we are getting the net profit. Okay, so this will be added with the capital. That is why it is written that it will be transferred to capital account. Now coming to the balance sheet, what we can see here is that we can see the appearance here is that it is been prepared in the liquidity method. Now some of you might have the doubt what is the liquidity method, what is the permanency method. In that case, you see the video where we have shared about or where we have discussed about the balance sheet. Okay, that will help you to understand. Now let's go for preparing the balance sheet. So we'll start with capital. We'll start with the liability side. So if we start with the liability side, we'll start with capital if we prepare the balance sheet in permanency method. And if we prepare in liquidity method, capital will appear at the last. Okay. And current liabilities will appear before that. So let's see the liability side. So in the liability side, we'll since we have already seen that here we are preparing in the liquidity method. So we'll start with the current liabilities. So one by one. So first of all, we can see that in the balance sheet, current liability, what we are getting. Yes, it is sales tax that will be coming first. Okay. That is instead of sales tax, I have written it GST payable 2,000 rupees, right? So that will be coming at beginning of all the other items. That will be GST payable. Okay, 2,000 rupees. Then coming to the next one. After that, you can just go on one by one. The sundry creditors are there. Sundry creditor 12,000 that will appear here. Sundry creditors 12,000. Then we can see the next item. Balance sheet liability. Just see balance sheet liability side where it is. Yes, loan is there. Balance sheet current liability 25,000 that will come here. Right? Loan 25,000. Clear? Then what else we have in the balance sheet liability? Let's check it. Balance sheet liability, balance sheet, balance sheet, balance sheet liability. We don't find here. Balance sheet liability capital is there. Balance sheet liability creditors is already done. No, we don't have any other item. We accept the capital. So we'll go with the capital now. So what is the capital? 2,50,000. Along with that, we have drawings of 48,000, right? So that will be coming here. So it will be placed in the end of the remaining items. That is capital here, right? Capital 2,50,000. Along with that, what we are going to do the adjustment? First of all, the net profit is going to be added. That is 78,000. Sorry, 76,860. So add net profit 76,860 rupees. The total comes to 3,26,860. And then we have to deduct the drawings that we saw in the top of the trial balance, that was 48,000. So it will be deducted because it was written by the owner. So less drawings 48,000. The total comes to now 2,78,860. 2,78,860 rupees. Okay, this is the capital adjusted amount. Clear? Okay, so this side is done. Now let's go with the other side, the asset side. So what is in the asset side? We'll just see from the font that is what is there. Since we are going to follow the liquidity method, so first of all, current assets will come. We'll start with cash balance. Okay, cash and bank balance. That is 4,460 rupees the cash balance and 4,000 rupees the bank balance. So we'll start with that. The cash balance is here 4,460. Then the bank balance 4,000 rupees. Right. Okay. Then we'll follow one by one the current assets. Let's see from the beginning what is there. Current assets. No, this side we don't have anything. We will go to this side. There's the balance sheet, current assets. Here we have seen that the sundry debtors are there, right? How much is the sundry debtor? It is 57,000. So it will appear like that. Sundry debtors 57,000. Okay. Now we'll see the next item. Before going to the non-current asset, we will finish up all the other items then. So we can see the current sundry debtors are done. Then creditors will not come this side. This is done. What is the cash and bank balance is done. Then plant, leasehold, dissolve non-current assets, goodwill, non-current asset, patent, non-current asset, trademark, non-current asset. And in adjustment, yeah, in adjustment, we can see one current asset is there. That is a closing stock of 25,400. So it will come here now. So we'll put it closing stock 25,400 rupees, right? After it is placed, then we'll go for all the fixed assets now, one by one. We can start with the leasehold property. So we can start with leasehold property, then we can go with the plant. Okay, so let's start leasehold building. What is that? 1,50,000. So we have placed it. Leasehold building, 1,50,000. After that, what is the next one? Plant, 42,000. That will also be placed here. Plant, 42,000. After that, one by one, just we can go with that. Patent is there. Goodwill will come at last. Okay. Patent is there, 10,000, and trademark is there, 5,000. So both will come. Patent, 10,000, and trademark, 20,000. Right. Now at last, let's see what is there. So trademark is 5,000. And at last, goodwill it is 20,000. There is a mistake here. The amount. Okay, now it is okay. So the trademark it is 5,000 and the goodwill it is 20,000. Right? Okay, I'll just put it a little down. Just a minute, I'll just edit it so that it comes okay. Yeah. Now it is okay. Trademark is 5,000 and the goodwill is 20,000. Okay. Let's check whether anything is left or not. Just see. Check and find out if anything is left. No, nothing is left. That means the sum is over. We can do the totaling of both the sides of the balance sheet and see that whether the both the sides are matching or not. If it is matching, then only we can say that arithmetically our sum is correct. Okay. So we can see that the both the side total it is 3,17,860. 3,17,860. That means the balance sheet total it is matching. Yeah. So here we end this chapter, that is final account of sole proprietorship without adjustment. In the next class, we'll start with the final account of sole proprietorship with adjustment. Okay. Till then, take care of yourself, take care of your studies, take care of your parents, and do mark your attendance. Okay. Bye bye, my dear students. Take care of yourself.